All right, Bill, welcome to another Lathrop Mortgage podcast. It is Friday, it is Friday, November the 10th, and today we're talking a little bit about interest rates, which, as we know, is not always the mortgage lender's favorite topic. So, what do you have to say getting into the preface of our topic today? And how are you doing? It's Friday, thank goodness.
Well, great. Yeah, thank goodness it's Friday, and here we are. Beautiful day in the Northwest. Hey, biggest thing about it, I think, is, rates have always been the biggest factor for us going through this year. But I think the thing I want to approach today, we talked about, is why is it a good time to buy? I mean, even with rates where they're at, why is that now is a good time to buy? And I think we kind of want to diffuse that a little bit and go through as to why.
And the reason this is relevant is because a lot of our customers or realtors, a lot of people we talk to say, I don't necessarily want to buy right now. Rates are so high. Coming off of the last couple of years, rates were much lower. So we're kind of feeling the sting of a rising rate environment, which hopefully now those tides are churning and we're seeing a little bit of relief, which looks like the end of this week brought the end of the relief as well, if you're watching mortgage-backed securities and looking at that side of the market. But we did get a little relief. But so that's kind of where we're coming from, some low interest rates previously, and that's what everyone was hoping for and everybody wants. And affordability is impacting now that rates are coming down from their 8% level. But we kind of wanted to drill on what the differences are when rates do come down. What does that actually look like? And what's the benefit to your monthly payment on the mortgage part of things?
I want to deal with that because what's the line we all hear? Hey, I'm going to wait for rates to come down. Well, what happens? That's the big thing, is let's define what happens when those rates come down. And then we'll go into the difference between the rates and why it's a good time to buy, and if you buy today, where you'll be in the future. But what happens when those rates come down? Everybody says, I'll wait. Well, then it gets back to what it was like when rates were down. Rates are not going to come down to the level. We're going to talk a variation between 8% going down to 5%. If it does that, that's a huge movement, and that would be tremendous. But I don't see the market going below that because we don't have the government involvement like we did in the pandemic.
And basically kind of the crux of our whole premise here is that there's a big difference between affordability and inventory. Or maybe not necessarily difference is the right word, but there's a very interesting relationship between affordability and inventory. Affordability obviously being driven by interest rates and what your monthly payment's going to be for the house. And then inventory also partly driven by interest rates. And
inventory is the culprit of this whole dilemma we're in.
And it's actually more than partly driven by interest rates, because part of the inventory problem is so many people have a low interest rate, they don't want to give it up. So not the average number of people are not listing their homes. They're tending to keep them now because they like that sweet low payment.
Right. I mean, if the rates get back down to 5%, we'll see a little bit of that loosen up because, that gets more reasonable, in the reasonable range of what they're used to. Right now, I mean, we go back in history, I hate doing that, but these rates are not terrible, but it makes it challenging for people. So if you can qualify today, this is why it's a good time to buy. The reasoning is when rates do come down, you're going to see the improvement, because when rates come down, if we wait for rates to come down, inventory's not going to increase dramatically.
Right. So what happens to inventory when the affordability increases? So if things are more affordable, more people can buy, they gobble up all the inventory that's left. So it squeezes inventory even further.
And what's that do? It pushes the prices up. You're fighting for the transaction versus going in maybe solo right now when a seller's looking at your offer, not 15 offers, and they may participate in paying closing costs today, which you won't see that in that market, and it's just less challenging. So you have more opportunity to get your offer accepted. That's why now is a good time, especially in the winter. There aren't as many sellers are serious out there when they're listing this time of year, as we mentioned, before, that it's a great time, because here's the affordability fact. If you can qualify today, it's a great time to buy. Here we go. Let's just take an example of a $500,000 loan amount, which seems to be an average level in the Thurston County market that we're working in most of the time. 8%, your principal and interest payment is around $3,668 a month. If you drop down to 7%, it drops down to $3,326, which is a $342 savings per month.
And I'll recap that really quick, because sometimes it's hard to visualize those numbers, but a 1% interest rate drop on your fairly average $500,000 loan amount would net you roughly $320 to $340 per month savings.
Yeah, it averages out. You take 8 to 5, about $328 a month. You're right on the money.
So that's a pretty big differential in your monthly cash flow. If you can shave off $300 a month, that's at least one trip to the grocery store.
Yeah. And so if the prices go up because rates come down, you're going to lose a little bit of that leverage that you have today. So today, if you could buy at 8%, let's say, it goes to 7, you save 342 months. If it goes to 6, that payment drops down another 328, or a total of $670 between 8 and 6. That's because you bought today. Now you can refinance and take advantage of that. And you're not competing with those prices going up, but your value is going up.
And that's the whole beauty of having a good strategy for this, because you have to compete to buy the house, inventory, whatever's out there, you're competing with everyone else. But when you're trying to lower your rate, you're not competing with anyone except for yourself.
Right.
So you've got your own rate. If you can get a better rate than that, you win. And then you can do a refinance. It'll have a break-even period and it'll make sense. And then you go forward with that transaction. That's easy. No stress. You don't have a seller saying, when can you close? Where's all your stuff? You just have you and your loan officer to get through it rather quickly.
That's a key point. You keep your same strategy. Work with your lender once you get into your home to plan for that future. So if and when these rates drop, which we see in the next 18, 24 months, that market, happening, then be in position to take advantage of it, because we'll see that. If the rates drop to 5%, that's another $314, or from 8 to 5, $984 a month. That is huge. That's what you get if you buy today and the rates rally in the future, because you were wise enough and able to purchase in today's market.
And regardless of whether your value goes up or down, well, I guess never mind up. Your value needs to maintain in order for you to take advantage of the refinance.
Right.
So that is a key piece of that too. But one of the things I want to really key in on here, if you can qualify for a home, but just barely, and it's really not comfortable, and you're like, man, I'm at the max, I just don't feel good. Rates really need to come down for me to be able to afford this on a real practical basis. That's not what we're talking about. We're talking about, hey, this makes sense. You can qualify. You can manage the payment. It's not going to crush your budget, but there is relief in sight. This is what these numbers could look like when things start improving. So don't make your decision saying, I can sneak in there now and I'm going to have to get that the refinance as soon as possible. Just know that relief can be on the horizon for you.
Exactly. That's why it's planning with your lender, making sure you're comfortably qualified, because the guidelines will tell you that pretty straight up. And you get into, and so you're comfortable, because we can tell you, hey, you're approved for $4,000 a month. You may only want to pay $3,000. So that's what's important. Your lender needs to listen to that, and your agents too. So you just may not be the market you want to purchase in. But
that's where your strategy comes into play too, to say, hey, we're going to buy this house and we're going to look further than our initial transaction. We're going to see, is there a refinance in play, or is there no refinance in play? And I really better make sure that this is the right move right now. So that's where it's kind of like, look at the whole picture versus, hey, you're pre-approved. Good luck.
Yeah. No, I mean, plan for today and deal with rates of today. We can't guarantee rates are going to drop, but rates have never gone up 5 years in a row. Rates have never gone down 5 years in a row. So and that's the way the market acts. It's not consistent. It's consistently inconsistent. Let's put it that way.
And what would you say is more volatile, house prices or interest rates?
Right.
Let's say over the long term. Interest rates, right? Because
rates, yeah.
If you look at a 30-year graph, interest rates are going to go up and down all over that, where home prices hopefully should have an average trend line of increasing.
Yeah, the biggest challenge that kind of skews all these numbers is the inventory issue, which we've been dealing with since the pandemic, and it has not improved. And we don't see massive homes getting built. We see massive apartments going up. So you might see some rent relief coming. We don't see massive homes going up because it costs more to do that, and they're taking more risk, and it just hasn't been that avenue for builders to jump out there and go for it. And right now it's a slower time, for builders too, but there's still, you can find a finished product to get into right away versus maybe you can't find the home you're looking for out there. That's a challenge too, inventory again.
And so these are some hopeful numbers. I think we're pretty optimistic looking at a 5% interest rate in the future. What do you think is a realistic outlook going for the next 12 months here? You think maybe we get down to the 7% range? It's like we see all these headlines, mortgage rates are doing better this week, but you're going from like 8 to 7.75. So it's a little bit better, but it's not like, oh my gosh, the floodgates are open and everybody's buying again.
And we saw the bad auction yesterday to stop that improvement. And so, it's a day-to-day thing. Rates change throughout the day. So it's not a weekly or monthly thing. It's happening throughout the day. And so all those things are a factor. But I mean, bottom line is rates will drive activity because affordability is everything. And it's just, I think you got the key point. If you can fit in today's market, if you can qualify, you just don't like the payment. I mean, nobody likes the payment, but if you can qualify within your budget, it's a great time to do that because of the lack of competition out there and the ability to get your offer looked at and to battle to get the home that fits what you're looking for.
So our advice, don't be one of these people that thinks, oh, I have to wait for interest rates to come down. I can qualify, but I just don't want to deal with this market. Well, really, you do want to deal with this market because you don't want to be waiting for a big what if. If the what if happens, take advantage of it. But don't put your strategy on, hey, I've got to wait for something I can't predict.
Yeah.
You can hope for that and hopefully you can improve. But let's go get some real estate now. Let's start building wealth. I think the average homeowner is 40 times wealthier than non-homeowner. I mean, it's insane what having a piece of real estate will do for your life in the long run here.
Well,
so that's why we're really passionate about it. We've seen people be able to do great things with their own equity and to be able to be comfortable for their families. And it's important.
It was a battle in 20 and 21, as craziest time ever in the mortgage industry. But I would say that the bulk of those people that got into a home, some may have sold and moved already, but I don't think any of them regret that. Process might have been tough, but because of the appreciation that took place. So it didn't hurt them. And I think now it created, it's more difficult today, but if you have the income to qualify, it's great. And so I don't think anybody ever regrets those types of things, but it's be in position, check your agent, make sure they're singing the same song we are, because they're going to tell you, why is it a good time to buy today? You want to know what their opinion is. It's not just us saying this. This is industry wide. But I think this information needs to get out so you understand the difference between 8 and 7 and 6. So those rates do move, how much better position you can be in the future while your value is going up, and you've made that movement at a time where you're not, battling against 15 other offers. Yeah.
And in the meantime, I'll touch on one thing really quick, but we always talk about our Step Up program. So if you need to sell your house before you can buy a new house and you're like, hey guys, everything you're saying sounds great, but I have no down payment until I sell my house, then I'm not gonna have anywhere to live until I buy the new house. We have a program that solves that problem completely. It's really slick. So call us if you want to hear more about that. You can get us, message us on the platform here, or call us. I'll leave our numbers up on the video here as well. So that's something we can overcome some of these hurdles that you're having. We're not here to force anybody into anything at all. We're just trying to educate and say, hey, this is what rates could look like in the future. Here's some options we have to help you get around obstacles that you might be facing. And if we can help you, we would love to. And if you just want to talk about it and challenge us and say, hey, you goofball, rates are going up, not down, or hey, inventory is not a problem at all, call us. We'd love to talk about all this stuff. That's why we're doing this podcast in the first place. And we'd love to interact on that kind of stuff. So
yeah, it's all about getting the information out there and being empowered to do what you can do, having another tool in your tool belt to go forward. But that Step Up product is awesome. So you can make a non-contingent offer in this market, which is what they look at. So you can make one move. You don't have to have the fear of selling your home and not finding one. Make one move, make it all happen. And that's just one smooth thing that it's hard to do without that product. And if you have to go compete with a cash offer, we've got fast as cash. You can close in 10 days. If you need to compete with somebody like that. So it's like paying cash. And when you usually do that, you get a break on your offer because sellers like that too.
So once you're pre-approved and you can get your head around, what you want to do as far as what your goals are concerned, we have tools to help facilitate those goals and help manifest your dreams and make those things happen. So we're trying to educate, get the information out there. If any of this stuff makes sense, call us. Maybe we can help you on some of the other pieces too.
Absolutely. It's a great time. It's a great time to buy if you're qualified to do so, because we look at the future when things will definitely make a turn.
Well, and what's the famous tagline from Keller Williams CEO? He says, it's always the right time to buy the right piece of real estate.
Yeah.
Like, oh, of course. Yeah. Look back in history. So
yeah, it's like they say, location, location, location. But yeah, it's a great time. But I think in our market, in Thurston County and in Washington, our values are maintaining because, inventory. But there's get out there and look. Yeah, because everybody's not out there looking right now because it's so lovely outside. Button up, but go out there and look. And and see what you can find, because it is a good opportunity. And let us run the numbers for you. Give us a call. We'll go through it and get you feeling comfortable about what's going on.
All right, great. Well, thank you for joining me for another podcast. We have the energy to keep doing these. We feel like we're just getting started. So if you guys are looking at doing anything through the winter, through the holidays, we're working just as normal as we always are. So reach out and we'll talk to you soon.
Yep. Just got to say, go Dogs, beat those Utes this weekend.
All right.
All right.
Take care.
Bye.
Bye.